watching Business World Live. I'm Danie Laurel. It's the start of a new trading day. Let's go straight to our top story. The Senate has approved on third and final reading the bill that seeks to allow 100% foreign ownership in public services such as telcos, airlines, and domestic shipping. 19 senators voted in favor of Senate Bill 2094, which seeks to amend the 85-year-old Public Service Act. This has been certified as urgent by President Duterte. The bill provides a clear delineation between public services and public utilities. The definition of public utility has been revised to those involved in distribution and transmission of electricity, petroleum and petroleum transmission, water and wastewater pipeline distribution systems, airports and seaports, PUVs, and tollways. The Constitution puts a 40% limit on foreign ownership of public utilities. Now, those defined as public services are telcos, air carriers, subways and railways, canals and irrigation, and domestic shipping. Under the bill, foreigners can now fully own these services. Three senators, Ralph Recto, Risa Hontiveros, and Kiko Pangilinan, voted against the passage of the bill. Citing national security concerns, Hontiveros said she was saddened that many critical services, like telcos, were opened up to 100% foreign equity. The health department advised all passengers in the same flight as the first two confirmed Omicron cases in the country to monitor for their symptoms. Recall that one of the confirmed cases is a returning Filipino who arrived from Japan on December 1 via Philippine Airlines. The other case is a foreigner who arrived from Nigeria on November 30th via Oman Air. The DOH is now also tracing the possible close contacts of the two patients. The agency says it might take a full month before the effect of Omicron could be felt in the country. But based on projections by the Octa Research Group, the entry of the Omicron variant could push cases to hit 800 per day, with 6 new ICU cases daily. The group says it might also push reproduction number in NCR to increase to 1.5 as early as January. But health officials are urging the public not to panic and just continue to line up to get their vaccinations. We're on rate watch today. BSP is expected to keep the borrowing rates on hold, at least at record lows, and that will be this afternoon at 3 p.m. You can see that on my terminal here. This, of course, follows the central bank over in the United States, which had the decision yesterday. They did say that they will be doubling the pace at which they will be tapering the bond purchases. It's going to be $30 billion a month. They also projected 3 quarter-point interest rate increases in 2022 and another 3 in 2023 and 2 more in 2024. So quite faster hawkish stance there. But what the markets did appreciate, at least over in the US, is that the Fed, they seem to not be doing anything rash to kill the market this year. This is according to Jonathan Golub at Credit Suisse. He said this on Bloomberg Television. They are not looking to disrupt the environment that we've had, and that's good news for the markets. A quick check of our health check on our local unit ahead of that BSP decision or hold decision. We are trading at 50 spot 172, the greenback strengthening a touch from the last trade. Now let's take a quick peek at our own bourse here and how we are performing. A little changed from yesterday at the open, but now enjoying quite a bump up. We're up by 0.6%, still below the 7200s we had already hit. We're at 7171.57. This as we rebounded, and I'm going to show you the chart here. I'll pull that out for you. You can see quite a V since yesterday. We dropped the most in Asia yesterday amid, of course, that Omicron detection. We sank as much as 2% before closing 1.5%. According to Jonathan Ravelas, and it does seem to be the case, he says hopefully this is just a knee-jerk reaction, but he did warn there could be more sell-offs if the index goes below 6950. Based on our chart here, you can see the cases still spiking all over the world, whereas we still maintain actually much less. We're actually 47 new cases yesterday, and this as the UK reported the most new daily cases since the pandemic began. And a lot of other companies all over the world, particularly Apple, for instance, delaying the return to office to a date yet to be determined. Now, here to chat with us about that slide and more to watch out for as we almost end the week, we have with us Rastine Mercado, Head of Research at Chinabank Securities. Good morning, Rastine, and welcome.
Hi, good morning, Danny. Thanks for having me, and happy holidays.
Almost holidays, my
Almost holidays.
Okay, well, speaking of the holiday period, Omicron, of course, this was expected naman to happen at one point or another. We were hoping it would be after the holidays so we could actually enjoy it. Why the major sell-off yesterday, despite the fact that, this has been going all over the world, and it was just a matter of time naman?
Well, I think it might just be a knee-jerk reaction. I mean, like we already sold off when news of the variant came out. Um, it was always a matter of when, as opposed to whether if it's going to come, right? So I think, technically speaking, the markets have already started pricing in the possibility of that coming in. We remain generally bullish for the prospects of the index into 2022. Of course, that's volatility will continue to be spurred by policy and Omicron-related news flows. Firmer data is coming out. So I mean, even if developments are starting to show that there are some concerns on Omicron, at least the good thing is that uncertainties are waning, right? So that's what markets are allergic to. So I think hopefully what we don't see is an exaggerated steep downside move for the index. But if history is sort of a teacher, when we saw Delta coming in, the news flows from that, we did see an initial sell-off, and then we did see another leg of a sell-off coming in. So hopefully that's not what we see this time around, considering we have much better vaccination rates at this point.
And considering we didn't go below 7,000, would you say that, that's a clear support level? I mean, that would have been broken, right? But we do have some warnings that it might be going below that. What's your take on that?
I think 7,000 is a critical psychological support level, considering that it's of course a threshold between the 6,000s and the 7,000s. But I think the major support that we should be looking at is around 6.9. That's your 200-day EMA. Once prices pierce through that, we might see even steeper downside from that point. But then again, the concerns or the risks around emerging variants have actually been there, right? It's just that hopefully we don't see this one really spurring the need for. I mean, we are pretty much in terms of vaccinations already making progress, right? So hopefully that will keep case counts a little bit more restrained this time around. I think it's also worth noting that mask mandates are still here for us as opposed to other countries which are experiencing a surge. So hopefully that also helps control the spread of this variant and the possible uptick in case counts.
Will we see the same as the past Delta and the first wave we're in? You can take a look at my terminal here. It seems to be na naman Converge, the best performer, Pure Gold, the best performer, and then, property stocks being sold off. Do you expect that to be continuing? Did the cyclical sell off and then a reversion na naman to the lockdown stock, so to speak, even if we don't have, a hard lockdown yet?
I think it's not going to be that steep of a move to your lockdown stocks. I think generally a lot of these stocks have their own stories, their growth stories. For example, Converge, of course, fundamentally strong as it continues to expand. In terms of properties, we might have seen that sell off because heading it over the past months, there has generally been a more bullish sentiment in that sector alongside banking, right? Because that's the whole recovery story we're looking at 2022. So those positioning, they've had gains as well. So I think it's just investors really pocketing some of those gains ahead of the volatility from Omicron related news flows.
Let's talk about the Fed decision, or at least the language that they've been doing, and why that actually, spurred at least equity markets over in the U.S. to rally. Why the hawkish tone is actually positive for markets? Normally, you'd be worried about rising interest rates.
Well, technically speaking, I mean, of course, there has been uncertainty all over that over the recent weeks and months. With inflation really running high in the U.S., it was only a matter of time before we see more hawkish comments from the Fed. But so I think if we kind of dial it down back a bit, uh, of course, higher interest rates are generally negative for fund flows. But
Mm.
given the little foreign fund flows we've actually been seeing in our market for the past 3 4 years, I don't think we'll have that kind of taper tantrum to the extent that we saw in 2013. I think
Mm.
the key thing to remember here, even in the US and even here, is that once the dust settles from the initial reactions to that, rate hikes are actually an indication that the economy is growing, right? So your central banks are recognizing that. So growing economies implicitly mean that corporate profits will also be growing. So this is generally going to be positive for equities.
But that's what they, Jerome Powell said about their economy is really strong, especially the labor market. So he wasn't afraid to be more hawkish. But can we say the same for the Philippines? I mean, are we seeing a same sort of trend here, or we aren't seeing that just yet, and therefore we really just can't keep in step?
Well, I think generally there has been a divergence in policy, monetary policy across the world, right? For us, at least in terms of inflation, that has been a little bit more restrained coming into the tail end of the year. So that gives a little bit more flexibility for the central bank to keep their supportive stance, right? But again, it will depend on what expectations are going to be. So I think the key thing to watch out for in the policy meeting today is where the BSP's heads at in terms of inflation and what possible trigger points they could be looking at for the next policy moves. So I think that the rate hike is the next policy move that a lot of market
Okay.
participants are waiting for.
What are you expecting that to be happening anytime soon? At least next year.
Well, I think general consensus is that it will happen sometime mid 2022. Again, that really depends on how inflation is going to be over the next month. So hopefully that doesn't it's not too much of a concern heading into next year. Hopefully.
What do you call speaking of inflation, especially since it's holiday season, and the last print was higher than expected. What would be worrying for markets looking at the inflation print?
I think what should be worrying is inflation coming in higher than expected and significantly higher than expected, right? I think that forms expectations form good part of how markets will react. So hopefully, the print that we see moving forward isn't as steep, or if there will be some upside surprises. Sorry, I think higher
Mm,
inflation means downside surprises. It won't be that big, right? So
right.
hopefully, I think that's the main thing that investors should be looking for or looking at.
Okay, so no surprises is okay as long as you expect that. Now, finally, let's talk about IPOs still happening despite all of this turbulence in the markets, and you have one specifically tomorrow, Solar Philippines, and a lot are watching out for that. They're saying that investors are jittery even if it's a hot and promising stock, right? So what do you believe might be happening tomorrow, and do you think that the jitters might be over and that there's still enough excitement to buy this IPO?
Well, I think hopefully, the market should hopefully warmly receive the issuance, right? I mean, it's a company that's operating in an industry with its own secular growth story, right? With the world shifting to more renewables, so I think that's something that it has under its belt. Apart from that, the issuance is purely primary shares, right? So there won't be any secondary shares involved. So it's really investors looking to put up money to help the company realize its prospects or its project. So I think that coupled with the secular growth story should actually be good for it. In terms of the market environment as to the day of its listing, I think what we're seeing now in the market, if we continue to hold at current levels, then we might not see that spillover effect in terms of sentiment into tomorrow. Hopefully, we do stay above 7-1 today or a decent uptick to help support price action tomorrow.
Okay, so Omicron, kalma muna. We'll try to see whether this IPO does manage to keep in step, especially as the markets are recovering today. You can see the all shares as well up by 0.5%. Thank you so much, Rastine and Mercado, Chinabank Securities.
Thank you for having me, Danny.
Checking in on the other headlines we're keeping our eyes on, the Finance Department is confident that the economy's fourth quarter performance will be enough to help achieve the government's growth target for 2021. DOF Chief Economist Gil Beltran said the 7% fourth quarter growth needed to hit the revised 5 to 5.5% full year GDP target is doable. Beltran explained that the target is still within range due to the further reopening of markets and the improvement of the volume of manufacturing in October. Finance Secretary Sonny Dominguez adds that the government will solidify recovery by reopening the economy to alert level 1 in January 2022. However, as it stands, 2 Omicron cases have been detected in the Philippines as of yesterday. Now, Philippine exports are expected to dip. That's as the Regional Comprehensive Economic Partnership, or RCEP, enters into force on January 1st. A study done by UN Conference on Trade and Development economist Alessandro Nisita found that Philippine exports could fall by $100 million. That's equivalent to about negative 0.1% when measures as percentage of exports to RCEP members in 2019. He said the reason for this is the negative trade diversion effects. This is some exports of these economies are expected to be diverted to the advantage of other RCEP members because of the differences in magnitude of tariff concessions. Now, recall that after 8 years of talks, the world's largest trade deal was signed on November 15th of last year. It includes China, Australia, New Zealand, Japan, South Korea, and all the 10 countries in the ASEAN. And that's the first look into the business day. Today is Thursday, December 16, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.